everyone. All right, I think we're live. Can you guys hear me okay? Everyone, we're here.
Hi, everyone.
So I guess as a general introduction, this is the beginning of the Near Without Noise community talk series. My name is Ozymandias. I'm head of Ants Guild, and I'm going to be leading this series with different projects in the Near ecosystem to give them more exposure to the community and to give them time to share what makes their project special. So today I have Peter and Jasper from Flux Protocol, CEO Peter Mitchell and CTO Jasper, and they will be going over for about 45 minutes the details of what makes Flux unique in the crypto space, kind of the vision of what they have in mind for the coming years, and some of the cool developer tools and incentive structures they might have in place for interested community members. So we're probably going to do a talk for 40 to 45 minutes. And then after that talk, we'll open it up to questions for everyone to ask directly to these guys. So I think to start, the best way to get going would just to hear a little bit from you, Peter, and also Jasper. Feel free to add in more or less where the idea for Flux started from and what the proposition of Flux is within the crypto space today.
Yeah, so thank you for having us on here. Super excited to be the first project on this Near Without Noise. So to give a high-level overview, Flux is basically the infrastructure, or you could say the plumbing for open financial markets. So we basically provide all of the developer tools needed to build a scalable and sustainable business in crypto today. So Jasper and I began on this journey by building the first app for derivatives on startups, and that was on top of Ethereum, Augur, Maker, and 0x. And while we were building this app, we ran into a ton of different problems that we thought were going to really hold back sort of our growth in the long term and sort of our approach to actually being able to build this business out. So from there, we basically set out to build, the tools and the infrastructure that we thought were missing in order to really bring Flux as sort of a Stripe for markets to developers. And so that's kind of how we got started in prediction markets. Quick background before that, I started a company called everydap.com, which is one of the first curation and ranking sort of like app stores for decentralized apps. So through that, I learned a lot about different usability patterns with users and developers, which really shaped sort of how we're now building Flux out into the future. So that's just a very high level overview on Flux, where we came from myself. And Jasper, maybe if you want to give a quick intro on yourself, that'd be great too. Oh, and Jasper's gone, I think. Did he just leave? Okay, so quick introduction on Jasper. Jasper is the CTO of Flux. So Jasper got his start with his first startup working with different, basically, Facebook publishers and created kind of a company around that. Oh, and Jasper's back. I was just talking about your first startup with Facebook publishers.
Yeah, basically, I built a company building dashboards for large Facebook publishers. So we were doing a bunch of data analytics, and that wasn't super exciting, but it was paying the bills. And what sort of was something I took away from there that got me very excited about crypto was the fact that Facebook made it harder and harder to build a sustainable business around their open data, so around their API. And they like to change the rules on the users of their APIs, which makes it super hard to build a sustainable business, because you have to not only acquire customers, but you also have to try to keep alive and sort of work around these sort of restrictions that they place on their data and APIs. And that was just it wasn't very nice. And one of the promises of crypto is, of course, that these gatekeepers are replaced by standardized rules that are guaranteed to always perform the same. So that means that there's no possibility of changing the rules for your users, which I thought was a very interesting premise, which actually prompted me to make the jump into crypto. So what I did is I called an old employer who owns a large Dutch web and app development company and told him, hey, I want to do something with blockchain. I'm not sure what yet. And he said, hey, We got a bunch of people here that are interested in blockchain in general. Would you be willing to sort of see if we can get something going? And what ended up happening is that I led the blockchain team there of around 6 to 7 people. We worked for large corporates like Heineken, for example, and built out proof of concepts, which was cool, but also didn't really move the needle as far as adoption went. So I got bored there pretty quickly and started doing freelance jobs in the evening hours until I ended up getting a job for indirectly for the Ethereum Foundation, working on plasma and scalability research, which was really, really cool, and I learned a ton. And during this period, I met Peter, and we sort of took it from there and got going.
I think maybe you guys both bring some pretty considerable experience from the crypto space to Flux. If maybe I'm a near community member that doesn't really know what Flux is at all, isn't familiar with the concepts of open markets, what could you guys maybe give an overview of that, and then also explain within crypto how Flux fits in? How is it different from existing projects, and maybe if it fits in existing trends that are very popular now?
Yeah, so on a high level, basically what Flux does is we provide, basically a platform for anyone to create a market on anything. So whether you're a developer and you want to basically power open financial markets, or you're a user that wants to create a market on something that doesn't have sort of a traditional or like centralized area that you can create that, you can basically come to Flux and spin that market up. So as an example, let's say you're a developer living in, let's say, San Francisco. And you want to create a insurance market on like weather quality, so like air quality, then in a few lines of code you can connect your existing app to Flux and launch that market and that platform, or you can clone our open source app and actually get that up and running in a few seconds, just adding your own logo or color scheme or whatever you want to do, and then you're up and running. So that's basically on a high level what Flux is and what we do for those who aren't familiar. And sort of, just in general, Flux, you could say, is a prediction market protocol, and that's what we're most sort of widely known as in the crypto space. But we frame ourselves as an open market protocol, which more closely resembles what we can power into the future, since there's a lot of different verticals that we can power, which I'll dive down into a bit later in the talk. But that's just on a high level what we are for the people who are new to Near or new to crypto and don't really know exactly what we're up to. Then if you compare that for the people who are in crypto to, let's say, an example like Augur, so one of the first protocols that built in Ethereum. So because of the current issues with the Ethereum scaling and cost per transactions, Flux is approximately 15 to 30,000 times cheaper than Augur with transaction fees. And in version 1 of Flux, we can actually resolve markets in 30 minutes for markets that have API data with finality. And then for arbitrary markets, we're able to resolve those in 24 hours with finality. So that's kind of like the version 1. In the future, we are working on other designs to bring this basically sub 5 minutes for API data, and then provide instant resolutions with finality for on-chain data. And so I think we can definitely push the envelope there as well. But on a high level, we're able to really speed up and make this process cheaper and more obtainable for users, and then also for developers. We've also implemented a CLOB structure, which is basically providing users with an open order book for trading, along with an AMM, which is more optimized for long tail markets that don't have a clear initial price discovery. So this means that all the trading can happen on chain with no need for any type of scaling solutions that are layer 2s, like for instance XDAI or Matic, that can kind of overcomplicate the trading experience.
So I think if I understand you correctly, big picture, Flux is a protocol in which a developer, an entrepreneur, an existing company that interacts with futures markets in some sense can go on, they can build their own market, or they can create a market, and then they can make predictions about future events using the tools and the technology that you're building out.
Exactly. So there's two types of users, or you could say, or stakeholders that will interact with the protocol on the front end side. So you have the developer, which will actually be building products on top of our infrastructure, and then you have the user that then actually interacts with these markets. So for the developer, they're able to basically create the front end interface that a user will come to, and then for the user, they're able to actually create a market on anything, and then be able to share that and have access to global liquidity with these markets as well. So these can be things like for politics. or sports betting as kind of like two prediction market classic verticals. But we also power things like synthetic markets on private companies, niche insurance similar to like Nexus Mutual or Open, and more new verticals like things on esports and stuff like that. So there's a lot of really creative use cases that are building right now. So it powers a lot of these different types of verticals that are a little bit broader than just the prediction market envelope that we normally have.
Yep.
Okay. And Jasper, I think you as CTO are doing a lot of work right now on the more technical development side of the protocol. If I were a developer, maybe in the Near community or even in the Ethereum community, or just a general developer kind of surfing around during coronavirus looking for something fun to do, what kind of tool or what kind of what's the proposition that Flux can offer to developers to build really, really good foundations for markets or tools to interact with markets?
Yeah, so basically our sort of Flux exists of a couple building blocks today. The base layer, which is Near, then there's a layer on top of that, which is the protocol itself. The protocol itself will handle market resolution, so making sure that markets pay out correctly. It handles trading through its trading engine. Peter, could you mute yourself for a second if you're moving around? Thank you. All right. Yeah. So the trading engine, which currently exists of a central limit order book, like Peter mentioned, which is something that is unfortunately too expensive to run on Ethereum, as Augur has proven, which makes, and because it's built on Near, it's actually super manageable. So fees per trade are below 1 cent. So this is something that you as a developer could easily cover for your users if you take a fee, or for users, it's not a huge commitment for trading. So that's sort of like the base layer. This is the core of everything that we're doing. Then on top of that, we've built a suite of tools that are usable by developers to sort of build products on top of. So we have an indexer, which is basically a state machine, because reading blockchain state is too expensive. So basically we have a copy of like on-chain state that's readable for developers. And then on top of that, we have parallel to the protocol. So if you'd have the protocol, then you'd have the indexer, and those are both like plugged into Near. And then on top of that, we have the SDK, which is a JavaScript SDK, so that any web developer can interact with both of these things through one central point, which would be this SDK, which is like an interface to both the indexer and the protocol.
And so just to give us an idea of developer interactions, what kind of services or things do you imagine developers building on through the SDK, kind of concretely?
Yeah, so there is different things that could be built. There could be derivatives markets, betting, like sports betting, and like political betting is a market that could be cannibalized pretty easily because the technology there is pretty legacy and outdated. Then we also have the ability for Oracle companies to sort of data providers to build businesses around our product today. And there's actually businesses building, and I see that Ethan Chesson is actually in the chat, who's building 2 products on top of Flux. One of them is weather derivatives that could be used for like weather insurance, and another one which is stake.gg, which is a way of betting on esports, which is fully automated, which is really, really, really cool. So those are some examples of things that we're seeing today. And then actually what's the most interesting part about Flux is that betting on Flux is sort of betting on developers, because I think that the biggest sort of total addressable market for prediction markets in general hasn't been found yet. And I think that giving developers the tools to experiment and iterate quickly around use cases is going to be the quickest way to find the largest TAM and find product market fit. And I think that this is super exciting. So I'm most excited about what other people come up with, but there are some pretty obvious use cases, like for example, derivatives or betting or something in that area. Okay,
so I guess on the one hand, Flux is this protocol in which there's a lot of new opportunity for developers to pioneer new solutions, possibly even new business models using data they can connect to the platform. Peter, do you want to maybe explain a little bit? I know you just wrote a blog detailing kind of how Flux might interact better from traditional finance. Could you maybe go a little bit around the more traditional entry point where we have developers building new solutions on the one hand. on the other hand, what can Flux offer to traditional financial companies, or mirrors of what traditional financial companies can build right now in a better way?
Yeah, so I mean, if you look, I'm unmuted, right?
You're unmuted.
Yeah, okay. If you look at prediction markets and sort of their history, they're actually pretty widely used in Fortune 500 companies since the early 2000s, actually. So some pretty famous examples of this was actually a study done by Google, where they actually used prediction markets to forecast their internal timelines, and also to use it to forecast their stock price. And they were able to actually do that with a 91% accuracy with their employees. And so what they found from this sort of experiment was that when their employees had some basically skin in the game with their markets, they were able to much more accurately forecast their own timelines for products, and also more accurately forecast the stock price as well. And so this is kind of like one interesting example that you've been used by Microsoft, by Amazon, by Ford, and a lot of kind of like large, more traditional companies. But that's kind of like how they're used today. One of the biggest problems that's been facing sort of prediction markets in general and sort of these open markets is that to date there hasn't been actually a platform that can support this in a fully trustless way, right? So what Flux is basically creating is this permissionless plumbing that where before you basically were always relying on something centralized to actually execute these trades. So basically in the same way that the internet allows us to exchange messages peer-to-peer, Flux is basically allowing people to exchange like financial sort of skin in the game peer-to-peer, right? So you're basically bundling a contract into basically data that can then be sent anywhere in the world, and you don't actually need to trust the other person on the other side. So it has a lot of different interesting applications in the long term for larger, more traditional companies. And then I'll give an example, on a vertical, actually building on Flux today. So this is WeatherDex, that Jasper was, just talking about. So this is basically like a crowdsourced insurance, you could say, is one aspect of it, which enables anyone from any corner of the world to basically create and offer these insurance contracts. And they can be underwritten by, one individual or like a traditional company, or even like a combination of all of the above. And so in most cases in the beginning, these will be like niche insurance markets. So they'll be focused on like weather insurance contracts, but they can always expand from there. So I'd like to give an example of this. So, let's look at, for instance, like the wildfires that have been happening in California. So let's give an example. If there's a woman named Alice, and she's going on vacation to San Francisco, and she is going to be going there to go swimming and hiking and just basically spending time in nature. But recently she was flipping through the channels, going through the news, and heard that there was a wildfire starting in Northern California, that let's say is about 150 miles from her Airbnb where she's planning on staying. So what Alice could go and do is basically create an insurance contract on the air quality of that zip code where she's staying on WeatherDex. And let's believe she thinks that there's a 10% chance the air quality index will be exceeding 151 points, let's say. So putting it in the area where it becomes dangerous for people to be outside without a mask, and to be, basically doing everything that is the point of the trip, which is swimming and hiking. So she basically wants to be covered if this scenario becomes a reality, because obviously Airbnb doesn't cover, if you can't do the activities you're planning for your vacation, right? So, let's say Alice goes to WeatherDex and she purchases the shares of the contract for, let's say, $100. That's going to cover up to $1,000 in compensation if the air index exceeds 151 points during the next, let's say, 3 days during the trip. So a collection of individuals and companies can then take the other side of this contract by putting in $900. So then what happens if the air index exceeds 151 points in the next 3 days? Alice is paid out the coverage of $900, which covers the amount for the Airbnb. And if it doesn't surpass 151 points, her $100 is basically paid out to the community and these companies as a premium for underwriting this short-term policy. So this is kind of like a real-world example of how this could work with WeatherDex as kind of like a point, which is something that doesn't exist in the market today, but is definitely something that could be interesting and could be grown into a decent and some sort of ways a very big competitor to traditional existing insurance markets. And then the second one is something that's near and dear to Jasper in my heart, which is this concept of derivatives on private companies. And so you can expand on that and say, a derivatives market for public and private companies. And so basically what Flux would allow is for any user to get exposure for the upside of a startup without having to lock into the underlying equity or token. And so an example would be going long on the launch date of Flux, launching its phase 3, so us doing like a public mainnet, or let's say like a total value lock metric on top of Flux, without having access or having to purchase the underlying token of Flux. And so basically what this allows is a user to really laser focus on one specific metric for success that they would like to trade on of a company specifically. And a second example of this would be a synthetic market on, let's say, the production line of Tesla. And this market would trade on the output of the assembly line at the end of the quarter. So this then allows traders to actually trade on a specific metric of growth in that publicly traded company. So then with markets tracking many aspects of growth from one single company, it actually creates like a super accurate health forecast of the current state of that company. So more doubling down on like what Google was trying to do in the very early days of their prediction market experiments. And funny enough, actually Facebook launched an app called Forecast recently, which allows Facebook users to actually forecast and crowdsource decisions and kind of forecast from the election for 2020. So that's kind of where we're seeing it start to slip back into the mainstream now.
I think to build on that, Jasper, if you would be willing to maybe go a little bit into, on top of WeatherDex, what other solutions are starting to build on Flux? And then is there a specific type of person or people from certain industries that you and the business development team at Flux are going to be interested in recruiting to kind of pioneer some of these first applications on the protocol?
Yeah, for sure. So yeah, so one thing that's also one of the projects that we're working with that I find philosophically very, very interesting is called Idea Markets. And what they are doing is they are creating a credibility index for news outlets. So basically they are allowing people to sort of quantify the credibility of, let's say, the New York Times. And through Flux, you could actually create futures markets on these credibility indexes. So what you could do is you could go long or short on the credibility of the New York Times based on your assumptions or private knowledge, which I think is very interesting and would be a very, very cool signal to sort of be able to externalize to everybody. So that's something I really like. With super niche, I'm not sure if this is something that has the potential to go huge, but like philosophically, I find it very, very interesting. Then something else that's very interesting is let's think. There's people that are working on social betting markets, which basically would be you can create a market within friends on specific things that you find interesting, and basically start betting on things that your group individually finds like interesting. Like if you're all into UFC, you can create markets around UFC. If you're all into the city council or whether a proposition comes through, you could do that. So that's actually pretty interesting. So that's called Satellite. And then the unique developers that we're looking for to build more sort of verticals and use cases would be people that are either early in the iteration or just have an idea and don't have the sort of power to execute yet, that we could help sort of get to market, because we are pretty early, our product's pretty early, and we would like to grow with these people and get like a ton of feedback. And then product-wise, what I think would be very interesting to see more of is more insurance markets, maybe around DeFi or specifically more crypto markets in general is something I would really, really, really enjoy seeing. So if anybody has any ideas about that, feel free to DM me on Telegram at Jasper DG.
And so I think maybe just to clarify for near community members and potential developers, the protocol is built in such a manner in which anyone can just start building on their own. They can create a company on top of the protocol, and they can build a very specific niche solution that they would then have, ownership of their app over on top of Flux. Does Flux offer any type of like incentive or support for people who might be interested in this kind of thing, or is it kind of in the early days and that's being worked out still?
We are working on a beta program. We have a couple of people already in there, but we are refining the terms of that as we speak. So there is definitely some support from our end, and like full attention, of course, because there's not a ton of projects building on top of us right now, as it will be in the future. So right now, you can really help shape Flux as it will develop into the future. And that's a pretty good place to be, I think, because we've actually had that with Near. We were one of the first protocols started building on Near, so we also kind of shaped the way that Near has developed and has gone outward to developers. So,
and maybe Peter, you could. This is a nice transition to maybe talk about that whole process. I think, as Jasper mentioned, you guys were a part of the Open Web Collective. You guys are one of the fastest growing projects on Near. We'll get into the development timeline of Flux in a second, but overall, why did you guys choose Near, especially having come and worked a little bit before with Ethereum? And what was your overall experience in the ecosystem and where you see it going into the future as well?
Yeah. So for those that aren't familiar with us as a team, we were actually like pretty Ethereum maxi about 2 years ago while we were building in that ecosystem. And, we were basically born and spawned out of Ethereum, right? That was where our experience in crypto was. So to jump to another layer one was actually a very hard decision that we made. And at the time, Near wasn't even on testnet, right? So we had extremely high conviction in the team, which actually took, a few rounds of iteration to really get that conviction, because we did a lot of different, sort of deep dives with a lot of layer one teams to find a home. So we looked at Solana, we looked at Flow, we looked at Polkadot, we looked at Cosmos, obviously not Tron or EOS or any of those, but the ones that were actually building legitimate solutions. And, from there really kind of made the jump. And so we said, as founders, we're going to basically take this execution risk of building on a new layer one, but we think that this bet is going to pay out in the long run. So that's what we did. We made that bet on Near. And so, yeah, we basically built through the beta program. So we were the first team in the beta program, building actually the first app and protocol on testnet. And then from there, we actually were the first protocol to launch on mainnet as well. So that was a very exciting milestone to launch our phase one. Back when Near was actually in like a permission state. Now it's obviously out of that permission state, and we're getting ready to actually announce something very soon over the next couple of weeks. That's exciting as well. So look at our Twitter and Telegram for more announcements there. But yeah, we're really excited, and we went through the OWC program, Open Web Collective. For those that aren't familiar, is basically a program that Near started, where they back founders agnostically. So not just founders building on Near, but founders building in crypto in general that are building open source tools that will bring Web3 forward into the future. And yeah, we had a great experience there. We were the first project to go through, so it wasn't as I would say scheduled and or built out as it is now for the founders for this batch one, which is great to see it really taking a better and more concrete form, you could say. But yeah, it was a great experience, and what it did for us is it really helped us to focus on traction, adoption, and really looking for different distribution channels to find these users and developers. And so while we were in OWC for 2 months, we ended up growing our testnet app that we had launched about a year ago. And we were able to actually grow that 40% week over week in terms of users. And then we were also able to achieve approximately, I guess, around 6,000 downloads of our SDK. So we did a pretty good job basically growing something that was on testnet. So there's really no incentive for users or developers to interact with us at that point, but we were still able to learn a lot of valuable mental models. So if you're a founder and you're listening, or if this is going on Twitter later or in our Telegram, definitely check out OWC. It's a great home if you're a new founder starting in crypto.
And just to stay on that for a little longer, could you maybe break down if say I'm an entrepreneur, I'm looking to build a new project on the Near ecosystem or any blockchain for that matter. More specifically, is this something that you did remotely when you applied? How long did the process take? What were the kind of requirements to get in the first place? Maybe a little bit more detail on that whole process for the people that might be looking on the outside and wondering if it's the right fit for them or if it's worth their investment.
Yeah, so I guess to start off to say, disclaimer, we did not have the same process that the other teams went through, just because we were so far along, and we were also basically there before the program was 100% built out. But I can comment a bit, unless things have changed, so don't quote me on this, but basically how OWC works now is that founders are basically invited into what is called sort of the founders club, you could say, or collective, where they basically have shared channels where entrepreneurs are basically checking in, and they are basically submitting weekly reports kind of on their progress in a very similar way to Y Combinator or like their startup school. And then from there, essentially, the projects that are consistently basically applying and really showing traction and basic commitment to the program, then they're moved into a separate section of the program, which is then the actual cohort. And in the cohort, you're basically focused on one thing, and that's traction and adoption. So the idea of OWC is that you come there with an idea where you're basically showing early signs of product market fit. where you can then use OWC and those sort of tools to really double down on that adoption and traction and really grow that pipeline in terms of your users or volume or whatever your sort of KPI is that you're going in there as a company. Then from there, Near is very well connected in the Valley and also globally with investors. So they have a ton of investors in their network that are all actively watching the OWC presentations and following the cohorts that are all interested in supporting and helping these founders by giving them their first seed funding, sometimes even their pre-seed funding. And so it's a great way for an entrepreneur to also get connected with a lot of great investors that can really help these founders along in the process to grow their vision. So that's just a quick overview. I don't know 100% if that's exactly how it works now for the application process, but I think there is kind of like a pool, and then from that pool, you're selected to join a cohort. And I think there's 2 cohorts per year.
And so I think, Jasper, you mentioned before that when Peter and yourself decided to build on the Near blockchain within the Near ecosystem, you felt like that gave you guys the opportunity to also help shape the development of the ecosystem as it was launching. Could you maybe talk a little bit about your interactions with the Near team and kind of you feel like it's a close relationship? There's support on behalf of the Near team for Flux as like one of the first big projects launching. Or what do you see in the future on that front?
Yeah, no, the Near has put a lot of emphasis on developer experience. So that was something that was really a relief when coming from Ethereum. And it's sort of like it's a large pro of not decentralized, like centralized companies in the beginning, because Near was still building. And this means that there's a single point of entry where you can ask all your questions. And they really had a good way of routing everybody to like the best place to ask your questions. And I think that our relationship with Near is in some ways developed into friendships with some of the team members, but like super close in the ways that we in the decisions that we made as Flux Protocol is today, and some of the infrastructure of Near has shaped. For example, we put a lot of emphasis on the Ethereum bridge. We put a lot of emphasis on being able to run in Rust and having good smart contract infrastructure there. Dev tools, the ways that unit tests work are also partly because of some of the input we provided. And then I'm trying to provide sort of libraries and then sort of standardized things that exist on Ethereum on Near today as well, and help sort of contribute to those. Like, for example, the ERC20 variant that Near has as a NEP20, which is called the NEP21 token, and that type of stuff. So yeah, I think that's about it. And then no, and if you compare to Ethereum, the experience is amazing, simply because of the on-hand dev support that you can have at any time.
And so I think, Peter, we alluded to this before, but as we said, it's the early days for the Near ecosystem. It's the early days for the Flux ecosystem. As CEO and kind of the captain of this protocol, where do you see the protocol developing in the short term, the medium term, and the long term? And then maybe we can get into some of the actual development details after that.
Yeah, for sure. So over the next 6 months, I'd love to see trading integration built into Twitter, which we already started creating about 6 months ago by launching a bot that can create a market from any tweet. So I think that, kind of playing into more viral staged markets is going to be really interesting to see. Whether you're Republican or Democrat, I think that the world is in a very sort of precarious state right now in terms of coronavirus going around globally. There's a lot of impacts that are going to be felt in the markets right now, around this election. And so I think prediction markets will find a very good home surrounding like social interaction, and I think they'll go pretty hand in hand. So that's the first thing in like the immediate sort of short term that I think is interesting. And then, in the next 3 to 5 years, I would love to see integrations with products like Twitch, Discord, Slack, Facebook, and many other platforms. And I think that what Flux will basically become is this layer of, if Near is like the internet layer, we're kind of like an email protocol layer where we're like SMTP, and the applications building on top are like Gmail, Yahoo Mail, and things like that. And so what we want to basically become is this open source infrastructure that all markets in the future are running on and interacting with. And we've really supplied this sort of plumbing for this liquidity to move through. And so that's kind of the long-term vision of Flux, is to really open up prediction markets and their ability to not only provide structures like derivatives and options anywhere in the world, and anyone in the world, and then also allowing sort of the predictive power of prediction markets. If you're not familiar, you can read a book like Super Forecasting or The Wisdom of Crowds, which both talk about sort of the real world sort of applications and aspects of prediction markets that are very interesting. We also wrote a primer on this, and I think that the Ant Guild as well did. So definitely check out those links. But yeah, I'd love to quickly touch on also sort of like what plays into our 5-year sort of timeline where I see it, which is the series of incentive programs that we've designed to basically engage liquidity providers across the stack. So we recently brought on Victoria onto Flux for joining as the new head of our business development, and she unfortunately couldn't be here today. She was actually supposed to be on this event, but she had her sister is basically having a surgery, so with COVID she had to take her to the hospital and all these things. So she was going to do a call in from the waiting room, but I said, hey, we'll catch you on the next one. So we miss you, Victoria, if you're watching, but next time. But she's been working very closely with liquidity providers, both in crypto and from an institutional perspective. And so, she has a pretty extensive background in traditional finance. And so what we've been doing together is basically designing a 3-tiered approach to liquidity mining. So the first bucket is the short-term liquidity mining. And this is where we're going into this area basically with like 2 mental models. So the first one is that the program has to be designed with KPIs for growth in mind, with set amounts of liquidity specified to different stakeholders of the network. So basically to different protocols and layer 1. So like, how are we going to incentivize liquidity that exists in crypto today to basically join Flux? And then the second mental model around short-term liquidity is that the majority of liquidity providers in the short term is what we call basically mercenary liquidity. And these are stakeholders in DeFi that are basically chasing yield and have no loyalty to the layer that they're actually providing liquidity to. So they're basically chasing kind of the best option for them at the time. And so basically this program is going to be designed to lock up between $10 and $25 million in liquidity in short-term capital over the next 6 to 12 months. It will mostly grow the taker side liquidity interest of the protocol. The second bucket is basically midterm liquidity, so basically moving past that initial mercenary capital. And this is the midterm liquidity mining program that we basically are approaching also with 2 different mental models. And the first mental model is that the program should incentivize larger amounts of liquidity to interact with Flux, and it's designed to incentivize larger areas of taker side liquidity. And this is by working with professional market makers that can basically attract more users from their current centralized options. So think users coming in from like Robinhood's options or like Betfair or Predictit, things like that. And so basically this liquidity in the midterm is designed to kick off a flywheel approach that we've designed. And so, kind of in an overview, it works like this. Market makers are providing liquidity to markets that are basically well designed and have accurate price discovery. This actually basically creates a higher quality maker side liquidity, which will attract more users that wish to actually interact with this liquidity on Flux and with markets that are only built on Flux. And then from there, this liquidity then attracts Flux token holders that are interested in earning a percentage of open interest. And basically, they earn this by resolving the market, so within our Oracle. And so all during this process, app developers are watching the Flux ecosystem perform and flourish. And as expected, they want to basically participate in continuing to fuel and grow that ecosystem. So it attracts more high quality apps, more great founders that want to build their own different verticals and niches. And so basically this program is designed to lock up kind of the capital bucket from 25 million to 500 million over the next 12 to 24 months. And the third bucket is a little bit longer out, and that's going to be less defined for the immediate future as we scale up our liquidity, but it will be targeted to like large institutional providers and will be designed to basically bring Flux from 500 million in total value locked up to 10 billion in total value locked across our market mechanics. But for the time being, we'll just be focusing on the short-term liquidity mining programs and just basically laser focus on cracking the nut of prediction markets and really bringing in users at an accelerated pace which is something that you see today in Polymarket, which is an app as an example that's built on another kind of like Oracle, which is the Gnosis Oracle that recently moved to a layer 2. That's seeing some good amount of volume, but really nobody's cracked the nut. And I would say that for us, cracking the nut of prediction markets is going after a milestone of, as an example, like 10 million in liquidity of total value locked. And until we get there, we're kind of like in early days still. So that's kind of our mental models at getting these users, and how we're looking at liquidity and incentivizing that liquidity for sort of like the short, midterm, and long term of Flux.
So just to summarize that kind of shortly, then there's going to be some pretty nice liquidity incentives in the next 5 to 7 months for the original liquidity providers on the protocol. And based on what you said about then the Flux flywheel, it will operate more or less along the lines of, as more liquidity is put onto the protocol, there'll be more incentives not only for token holders but also developers to participate in kind of a virtuous self-reinforcing cycle.
Exactly, and that's what we don't see many times, right? So as an example with Compound, as soon as the liquidity mining stops, the incentive stops. But on Flux, you really kind of like use the liquidity incentive to basically as gunpowder to launch this flywheel. And then from there, the flywheel continues as the ecosystem grows. And so the idea is to move past liquidity incentives, where market makers can make enough money by providing liquidity that they don't need to rely on liquidity incentives to subsidize their liquidity process and sort of market making, to the actual markets themselves.
Okay. So I think it's overall, I think we could all agree it's a pretty exciting time in crypto, or we're on the brink of some pretty exciting times in crypto, especially relating to markets. Could you guys maybe go into a little bit about the development timeline of Flux, where we're at now? If I've never heard of the protocol before, is there a mainnet? When can we expect kind of the next stages and the next iterations? And then what's the goal of when it'll be usable and I can go build my own market, right now?
Yep. So we just went through our quant-time security review. There were no huge vulnerability found, but there is some optimization that can be done there, which we expect to be done late this week, early next week. After that, what we'll do is we'll launch a permissioned version of the protocol on top of NEAR on mainnet, which we will use for internal testing between us, the NEAR team, and some investors, and you guys, of course. Basically, what we'll do there is we'll bridge over some stable coins from Ethereum and start the internal testing. Once that's done, we are going to go into a full shift to work on the Oracle development. So making sure that the resolution of the market, so making sure that the payouts done correctly, is sufficiently decentralized. Because how it works right now is anybody can provide the outcome of a certain question of a market, and anybody can then come up and say, hey, this is wrong. And if that's happened, this is called a dispute. Either Peter or I is the person to sort of say, hey, what was the actual final outcome? So it's actually pretty centralized. The final arbitrator of each market is me and Peter, and we want to remove that as a potential vulnerability before we have a full public launch. And that is aimed to be done either late Q4 2020 or early Q1 2021.
Okay, so a pretty nice time to get involved in Flux right now before it becomes too popular, too well known, we could say.
Yeah, definitely. It's time to build.
It's time to build. Okay, so I think we're at about 42 minutes. We'll go to questions in a second. Before we go to questions, I kind of just wanted to do a general summary of more or less everything we've gone over quickly so that everyone can get a bite-sized understanding of what Flux offers. So feel free to add into this, but Flux is an open market protocol for developers and entrepreneurs to build their own niche markets on top of. It's launching on the NEAR blockchain. There's a number of liquidity incentives. The development timeline is quite stacked into the long term, but right now, I guess where it stands is it's still in its early days, and there's a lot of opportunity if you're looking to get involved right now.
Yep, for sure. That's great. Great way to summarize it. Yeah.
Awesome. All right, let's and I should actually add, there's a good amount of information on Flux on your Medium page, Peter, and then on the Ants Guild website. So if people are interested in things like the token, liquidity mining, some of the big picture focus of Flux, there's a lot of great information there. With that, I think we can start looking at some of these questions.
Yeah, so, and could you also put the links for the Ants Guild down in the chat as well?
Yeah, sounds cool. Good. Okay. If you guys want to take the questions, I think we have a couple down here. Feel free to just go for it.
Yeah, I'll shoot.
Go ahead.
yeah, the first one is what prediction market would you personally bet on, for both Peter and I. So I am not a huge degenerate bettor. I do like trading in cryptocurrencies and stuff. But if I would be, if I like, what I would use Flux for myself would be to go long or short on probably indexes of private equity metrics, which I think is very interesting, and public equity metrics. Something else that I would like to do is I would like to go. Something else I'd like to do is go short on an index of traditional finance, or not traditional finance. Sorry, traditional news publishers, which I think is also going to be pretty lucrative. And then something else. Yeah, probably some esports and sports betting. I like UFC, so I'll probably go long on Khabib this Saturday.
All right.
Yeah. So for me, I think I mirror a lot of the same things. I'm not a huge bettor in the traditional sense. I mean, we're founders in crypto, so obviously we like risk. But you know, we like risk with you know, outcomes that we can predict, which is also, you know, a tie into why we're building Flux, because we want to predict the future. And so, you know, in general, yeah, definitely interested in you know, markets around private companies. So startups, public companies, I think those are super interesting. You know, I'm a big fan of the esports markets. I think that's really like an untapped area, right, where esports is growing. Right now, esports betting is like almost a $14 billion market per year, but it's super inaccessible, and providers are charging fees from like 30, 50%. And a lot of that blows back on the users and the teams that are providing the market. So I'd love to see that, you know, kind of democratized and opened. And I think that, you know, Stake.gg and Artera are both two companies that are approaching that from different angles, but are definitely going to, you know, provide really cool value there. Definitely interested in like niche insurance. I think that's really cool. My brother-in-law is actually originally from Tanzania, and I see a lot of different applications, you know, to kind of roll that into countries in Africa where insurance products aren't really readily accessible. And so I'm really excited about that as more of a vertical that'll be more philanthropic than betting. And so those are kind of the things that I'm most excited about for the short to midterm. But I think there's going to be developers much smarter than Jasper and I that will come up with even more creative and exciting ideas to build on Flux. So really excited to see what will happen into the future from there.
Yep. And then there was another question regarding why we chose Near. And I think I can touch on that pretty briefly. So the largest competitors at the time for a next generation blockchain, when we had to sort of choose a new layer one, was either wait for Ethereum 2.0, either try doing something on Cosmos or Polkadot, and then there was like Solana wasn't really an option yet. But I can go briefly over why I would never choose Solana. But like Near is the only one of these protocols that actually resembles the way you build smart contracts on Ethereum due to like dynamic sharding. And Near has infinite scale, infinite linear scaling, basically 200 times the amount of shards that are live in a network, which allows you to load balance your transactions across shards and basically scale infinitely, which is really, yeah, that's super promising. Ethereum obviously is gonna launch. Ethereum 2.0 is gonna be super late. ETH 2.0 is near. It's like the tagline, of course. And I don't want to deal with parachain auctions on Polkadot as a developer. I just want to build my protocol, make sure that it lives there, make sure that it's that it's guaranteed to be like doing its own thing, and like not having to deal with making sure that there's like block space on like whatever parachain in the next years. Like I want it to be living there immutably. And then Solana is a hacky way of faking skill almost by just using very expensive infrastructure that basically prices out any regular validator or staker.
Yeah. And then on one last note that's like non-technical, like our team has been approached by almost every layer one in this space with, you know, large, I won't go into numbers, but like very large amounts to try to get us to move off of Near. And Jasper and I could have probably retired out of crypto very happily by now if we had taken one of those offers. But we're really looking for a home for our company into the future, something that will really help bring prediction markets to scale. And we're not going to be an Augur 2.0 where the founders run away with the capital and never come back to the project. So just to clarify for any entrepreneurs that are out there, if a project's paying you like 500K, $1 million, et cetera, to move to their layer one, like think about why they're paying that to you and why people aren't going there organically. So I just wanted to leave that one last note on the near side. And then I want to quickly touch on the Oracle. Sorry, was on the wrong chat thing. So around the Oracle, yes, we do have information. We do have like specs for the Oracle. We just haven't built the full-fledged version because we were focusing exclusively on the market mechanics to begin with. So basically how the Oracle will work is basically validators will stake their tokens, each epoch, and epoch is basically 1 day on the Near protocol. From there, these validators, unless Jasper, was it now changed to? It's still 1 day.
1 block. No, 1 block.
Okay. Oh, 1 block. Okay, 1 block. Okay, so it was expedited now. So 1 block, and then from there, basically, this creates a validator pool. This validator pool, you can think of it kind of like signing up for the draft. And so you're basically signing up to be drafted to provide resolutions. And what this does is it allows us to basically have a large pool of validators, but then select a subset. So what we actually do is we use Near's randomness beacon to then define a subset of validators from that pool that then actually provide the resolutions to markets. And this has a couple different benefits. The first one is that no validator knows if, when, or what market they'll actually be resolving, which means that it's much more secure because in protocols like Augur today, the market creator can also designate the resolver address. And so normally the market creator, I think we did a study, I guess almost 2 years ago on security of Augur, and in over 51% of the times, the market creator was also the market resolver. So that works in the beginning when there's like 7 users right now on Augur, but as Augur may, or if they scale, there'll be a lot of markets and it'll be much more easy to pass these resolutions when the market creator is also the resolver. And then the second reason around that is it also allows us to speed up resolution time. So because you can trust the validators you select more because they have no skin in the game of the market and they're making money by providing the correct resolution, they only have something to lose if they don't provide the right data. They don't have anything to win over providing the wrong data. So that's how the Oracle will work in short. There'll be two different tracks for API-based data and for arbitrary data that work a bit differently in terms of time mechanics. So, like I said earlier, the API-based data will resolve in 30 minutes with finality. Arbitrary data will be in 24 hours with finality. And these times will increase for the API data as we begin to refine that. But that's basically the overall structure and how we're going to be building it for version 1 of Flux.
Yeah. Yep. Sounds good. Just one thing I wanted to touch on is that randomness exponentially increases security. So that's super, super good and something that we're very, very happy with that Near provides natively.
All right, I think was that the last question that we were going to address?
I don't think there's anything more. Does anyone else have any questions?
I think that's it.
Cool.
Okay. Great. Well, before we close off real quick, I just want to kind of do a larger big picture overview of kind of this whole series and what it's going to be. Peter and Jasper kick this off, and we'll probably have them back on as well, especially as things continue to develop with Flux. But the big picture point here is that this is a community-run initiative. This is very much kind of the Near community's attempt to connect different components of the ecosystem and to kind of represent what's available. If you're interested in contributing, if you're interested in building, if you're interested in getting involved in any way, this series is for you. So we're going to be continuing this series going forward. But the main thing I think to emphasize is that now is really the time to get involved with Near. Before it's too well known, these are the best days when it's just getting launched, when there's a lot of opportunity to build on Flux, to build on Near. Don't hesitate to reach out or to get in touch with the Near Foundation or with Ants Guild, and we'll do everything we can to get anyone set up and ready to start building or creatively using their skills to advance the ecosystem. So with that, I guess I'd just like to say thank you, Peter and Jasper, for your time. We'll hopefully have more content coming out about Flux in the coming weeks, and definitely some exciting news as well as the protocol continues to develop.
Yeah, sure. Yeah, I just quickly wanted to thank the Ants Guild and Near for putting this together. And yeah, this was great. Looking forward to the rest of the conversations.
Yeah, thank you so much for having us on. It was great to be on and be the first sort of kickoff project to kick off this Near Without Noise. And yeah, always happy to come back on and you know, chat about Flux. And I really love the idea of this series to really cut through all the noise. You know, in our Telegram chat, it's a bit exhausting because it's just like win moon, win token, win listing. And, you know, it's really great to talk about what we're doing behind the scenes and about what's happening with the company, the tech, and, you know, our mental models for building Flux into the future. So thank you for having us on.
Awesome. All right. With that, we'll close, guys. So everyone have a great day, and we'll see you next time.
All right.